Okay, well, good morning, everyone. I think we'll kick off. My name is Andrew Album. I'm co-hosting today's presentation along with Mike Ellis, who is the Chief Investment Officer of Pioneer Wealth here in Israel. Welcome to people who are joining from the UK. Hope you're all surviving the snow and the freezing cold, and of course, people joining us from here in Israel. So this morning's presentation really aims to address a number of the mistakes that Olim have made with their finances and how to fix them. And if you haven't made Aliya yet and you're planning to, best to know about these problems and difficulties in advance and know how to plan your finances so that you don't experience them when you make it to Israel. Before we kick off and deal with some of the key issues that we wanted to address this morning, just a quick regulatory sort of disclosure, which is always very important. So, as some of you know, I'm known as the only financial advisor in the world who is both licensed in the UK and licensed in Israel, working with leading firms in both countries. That makes me uniquely placed and experienced to understand the specific issues that confront Olim from Great Britain and how to plan your finances in Israel. Now, there is no firm in the world that has authority in both the UK and Israel. They're separate jurisdictions. In the UK, just to make clear, I am a senior partner at St James's Place, a FTSE 100 company, and one of the leading providers of financial advice in the UK. In Israel, I'm a senior wealth manager at Pioneer Wealth here in Aliya, and we are licensed by the Israeli Securities Authority to give financial advice in Israel. Hopefully, it should be clear that if you need advice on UK aspects of your planning, then that means being advised through St James's Place, and that is something that Pioneer is not responsible or part of, and vice versa. If you're taking advice from me in Israel regarding Israeli financial planning issues, then Pioneer is the firm that stands behind the advice that's given. Anyway, enough of the regulatory disclaimers. Let's get on to the main issues that we wanted to talk about this morning. And this is basically Mike and I sharing our experiences of working with Olim from around the English-speaking world over a number of years, the mistakes that they've made with their finances, and if you're trying to achieve financial security in Israel, how you can position yourself to achieve that and have financial peace of mind. There's an old joke, of course, about how do you make a small fortune when you come to Israel by coming with a large fortune. And of course, that's a good joke that everybody laughs at. But I would actually suggest that you can, if you have a small fortune when you come to Israel, whatever size that fortune is, you can keep its value and you can look after it with prudent financial planning and by avoiding the mistakes that unfortunately too many Olims seem to make when they emigrate to Israel. So the first mistake I wanted to talk a little bit about this morning was the mistake of holding too much money on deposit. Of course, everybody needs money in the bank, short-term expenses, the unexpected emergency, a cash flow to keep you going in the coming months. But cash has never been a long-term investment that's provided returns to protect your value, the value of your capital against inflation. And we've seen in recent years an absolute collapse in interest rates from historical levels, such that we now live in an environment where interest rates are pretty much zero. Whichever country you've got your bank deposits in, whichever major currency you have your deposits in, you are earning zero on money on deposit. And it's not just an issue of this is going to be the outlook for the next 3 or 6 months. What the markets are telling us is for the next decade, we're looking at interest rates of close to zero. Government bonds in the US and the UK are showing there's barely any return to be had at all from leaving money on deposit. What are the solutions, Mike?
Thanks, Andy. If you are sitting on too much cash, then take comfort that you're not alone. In today's world with Corona, and certainly if you're planning Aliya, it's quite reasonable to have excess cash. But from an unemotional and asset allocation point of view, that cash is not going to be working for you in any way. And the principles of asset allocation and a multi-asset class portfolio are still relevant and probably even more relevant in a low interest rate environment. So if you build a sensible, low cost, diversified portfolio, you can still achieve returns, certainly above cash rates, without taking excessive or crazy risks on your capital. The carry on, Andy.
Okay, great. Thanks, Mike.
Sorry, I'll just share an anecdote. I'll just share an anecdote about a client of mine who 3 years ago was concerned that the stock market was overcooking, and he withdrew all his money, and I couldn't convince him to invest in long-term planning. And had he stayed invested over the 3 years, he would have gone through two crises. One at the end of 2018, when Trump announced he's stepping up the pressure on China and the markets collapsed quite significantly. And then, of course, in March 2020, with the coronavirus. So the client at 2 points in time in that period was correct. His fears were realized, but had he just remained invested and disciplined in a long-term strategy and just went through those two crises, he would have been approximately 25% above where his capital over these 3 years, because they have been very good years from a return point of view.
Right, great, okay. The second issue I wanted to talk about is perhaps, in my view, the most important one of all for people who are making Aliya, and yet it's one that most Olim fail to adequately understand or recognize. So, of course, when you're living in the UK, your income is in sterling, your assets are in sterling, you're spending almost all of your money in sterling, and your liabilities, if you have a mortgage or loans, are in sterling. And you don't really think all that much about foreign currencies, least of all the shekel, perhaps, of course, when you come to Israel on holiday. You come to Israel on holiday and you find maybe things are a little bit more expensive than last time, maybe about the same, maybe even a little cheaper. But the shekel is really not a major concern for you. It's important to understand that once you're living in Israel, the shekel becomes a crucially important issue to your financial planning and your attempts to achieve financial security. Your liabilities will be in shekel. Your expenses will be in shekel. If you leave the UK in a situation where your assets and your income is all in pounds, then you're going to leave yourself with a considerable mismatch between your assets and your outgoings. And that considerable mismatch could become a very, very painful and costly mistake if the shekel appreciates or if the pound goes down in value. And of course, we've seen that in recent years, as the next slide shows, which compares the pound to the dollar. So on a global perspective, the pound's been weak. Now, of course, if you have fixed income in sterling, such as UK pensions, there's nothing you can do about that if it's state pensions or pensions already in payment. But other assets, if they're left in sterling simply because it's a currency and a market you're familiar with, can leave you very, very exposed. Because globally, the pound has been weak, and of course, against the shekel, it has been even weaker too. Back in 2007, £1 bought you over 8.5 shekel. The rate has now fallen by almost a half. If all your income was in sterling through that period, you would have seen a 50% decline in your standard of living. That's a huge, huge, huge change. And that's something that many people just never prepare their finances for. The ideal, of course, would be to invest in currencies where the shekel never goes up, and more important, never goes down, where the value of your income is always the same. And I'm sure at least some of you on this webinar will know exactly which currency the shekel has performed against over the last 15 years to produce this flatline return, and that is the Israeli shekel. So Mike, how is it possible to deal with the issue of pound weakness and potential future sterling weakness to protect assets and income?
Okay, Andy, just jump a slide. So in our experience, we see typically the UK market is very UK-centric, as Anthony said, and they're underinvested in US dollars and US assets, and certainly underinvested in Israeli shekel assets. In fact, as a sweeping statement, most immigrants, most Olim Chadashim, are underinvested in shekel. One, they've either chosen the 10-year tax-free route, and it's been very costly, as Andy explained, or two, they're just unfamiliar and don't trust the Israeli system, or their Hebrew is such that they can't interact with the local providers and they feel uncomfortable and therefore stick with what they know. And again, it becomes a very, very costly mistake. So one can manage either a dollar strategy, okay, which is very global, which would include US and other countries and jurisdictions as well. But also you could make the decision that you'd rather be in shekels and you'd rather have the tax exposure in your first 10 years and not have the currency risk. The trend in Israel is a growing economy, not Corona notwithstanding, and there's a tremendous amount of gas exports, and the view is that the shekel will continue to strengthen. There isn't, this is a very difficult thing to predict where the currencies will be, but there's certainly a possibility of continued shekel strength. When you look around the world, it's not difficult to take a view on economies like the USA and England, that their currencies may weaken. So we could see a continuation of this trend there'll be short-term fluctuations, but we could see a continuation of the trend of a strong shekel, which really forces the decision onto the Oleh Hadash about how much to be invested. When you're invested in a shekel portfolio, it doesn't mean that you're exclusively exposed to the Israeli market, okay? You could have, and we do this, our shekel portfolios do have global exposure. So for example, you could buy US exposure hedged back to shekels. You could even buy Chinese exposure, which we do. So you can have global investment exposure, but without the currency implications. And that is a very good solution for people who, as Andy said, underinvested in shekels.
I agree. I mean, just to echo what Mike said, two things. One of which is most of the people I meet who've made Aliya have far too little shekel exposure. And when it comes to financial planning, sometimes the old adages are the best. One of which, of course, is don't put all your eggs in one basket. But another one is not to let the tax tail wag the investment dog. And whilst there would be some tax to pay during the first 10 years after Aliya, whereas other investment returns may be tax-free, perhaps sometimes even for new Olim in their 10-year period, a balance is a better solution between global tax-free returns and shekel returns that have some tax on them, just to give you greater security in terms of currency fluctuation. And the second point is that, the trends that have pushed the shekel higher and higher against all major currencies, including the dollar, the euro, the Swiss franc, and the yen over the last decade, are trends that look like they may well continue over the coming years. Mistake number 3 that I frequently come across is people thinking that property is as safe as houses. And of course, property is an investment that many have enjoyed benefits from over time, be it their own family home, be it commercial property, be it buy-to-let residential properties. But property does come with certain drawbacks that means it isn't an ideal investment. It's of course very illiquid. You can have gaps in income where you have vacancies. There can be issues with capital expenditure for renovations on residential property. And there are certain things to also think about that come to the fore when you're living in Israel and you're investing in UK real estate, that perhaps swings the pendulum even further against the idea of having too much money in residential property. The first, of course, is the geographical remoteness. Site visits, very difficult to achieve, of course, even more so over the last year. And the problem of just being in touch with what's going on back in the UK becomes an increasing challenge the older you get. From a tax perspective as well, there are certain new dynamics to think about that make property far more tax efficient than perhaps it was when you were living in the UK. The first is during your 10 years, you'll be paying UK income tax at your highest marginal rate on rental income. That could be 20, 40 or 45%. You could, of course, be enjoying tax-free returns if that money was invested differently. There may be capital gains tax to pay on realizations. And irrespective of how long you live in Israel, and it's a subject we'll come back to in a few minutes, you will be subject to inheritance tax on all of your UK property assets like you will on other UK assets. And that can leave a considerable tax bill to pay for your estate and for your beneficiaries. Is there a way to access property, Mike, that clients of ours have enjoyed, which doesn't necessarily come with all those drawbacks?
So it's probably one of the most common questions I'm asked: should I have my money in capital markets or should I have my money in property? And the answer is always it's neither one or the other, it's both. Property is part of a holistic plan. Everyone should have property in their portfolio, in their family wealth, whether it's your house or whether it's investment property. It's part of the solution. Investment properties, where there's a certain amount of leverage, have advantages in terms of returns in today's environment, because they're the leverage creates additional returns. So it's part of the solution, not the whole solution. And certainly, in Israel, we can see how many apartments are being built all around us. The rental yields are always low because there's an expectation of capital gains or increased value. It's hard for me to see at this stage that we're going to have continued capital growth. So because of the sheer quantity of apartments that have been built in key areas in Israel, maybe in outlying areas you might find something more interesting. But when you look at the net yield of a property, taking into account legal fees, agent fees, maintenance costs, etc., these are pretty low yields too. So it's never one or the other, it's both.
Okay, thank you. An issue that I'm increasingly focusing on in my discussions with clients is the issue of the fees that clients pay to have their money looked after and to receive advice. Often people come to Israel and they say, you know what, Israel seems really expensive. But actually, life in Israel, in certain ways, that's true, but in other ways, it's not. And one of the ways in which costs in Israel are significantly more competitive than in the UK is when it comes to having your money managed and receiving financial advice. I meet so many clients who are paying what I would consider to be excessively high fees on UK or Isle of Man or Jersey structured investments, which they were advised on and set up before they made Aliya. More often than not, they don't actually know exactly what they're paying. But when you look under the bonnet, and as I often do, and do a proper assessment of total costs and charges, it amazes me how much clients are actually paying. And that's often a similar case for clients of mine who have money with Swiss banks or discretionary managers. The headline fee may seem very competitive, but the total all-in cost often exceeds 2 to 2.5% a year. And in an era of low interest rates and therefore probably lower investment returns over time, you may end up giving 40 or even 50% of your total returns to your money managers if you're locked into that kind of high fee structure.
Okay, so on the solution side, so in Israel, we do not charge entrance fees or front-end fees, and there's no exit fees as well. And the portfolios that we build are much more transparent, and you can easily see what your total effective cost is. I see we've received a question, what is a low-cost portfolio? So it depends very much on the size of the portfolio, but for I always have there's layers of fees. There's the custodian, there's the product, there's the advice, okay? And all three of those together, if you can get it under 1.2, great. A large portfolio, tens of millions of dollars, will find it easier to get to much lower numbers than that. But for an average size portfolio, if you can get to 1.2, then you're doing significantly better. And that's at least 1%. I mean, Andy said 2.5. I've seen UK portfolios with even more than that. So costs are very, very, very significant, especially in a low interest rate environment that we're in. Another very important point is the model that your advisor uses. In Israel, there's all sorts of types of services in our industry. The way we work is completely strictly independent. So we contract that our only source of income is what the client agrees to pay us, and it's not from the product. So whilst this is irrelevant in a liquid portfolio, or largely irrelevant in a liquid portfolio that's going to have a lot of low-cost index trackers and other low-cost mutual funds, institutional class mutual funds that don't have a retrocession. In the world of alternatives or property or any type of those type of investments where it's quite common practice for there to be a retrocession or introductory fee to the advisor, we contract with our clients that will be refunded to them in full. So that keeps the advice free of any conflicts of interest, and it keeps the total effective cost down and reasonable.
Okay, great. Thank you, Mike. 15 years or so ago, when we were thinking of Aliya, it was very common for advisors in the UK to suggest complex or expensive structures for clients to invest their money in once they'd made Aliya. This often involves setting up an offshore pension known as a CUROPS, or setting up an offshore bond or wrapper, maybe in Dublin, the Isle of Man, Jersey or Guernsey or Malta. When the tax rules for New Olim changed in 2008, that really changed the landscape in terms of perhaps what's the most effective way to structure investments and assets. And those changes took place in two ways, some of which I think many advisors are still not fully aware of. The first is there is no need to set up an expensive offshore platform if you want to benefit from the 10-year exemption on non-shekel assets. It's perfectly possible to set up a portfolio and have your investments with custody held by your Israeli bank, and you still have tax-free returns, income and capital gains on your non-shekel assets for 10 years. There's no need to set up an offshore wrapper to achieve that. The second, of course, is how the world has moved on in terms of money laundering legislation and attempts by tax authorities to clamp down on this very same problem. The Israeli banks, as many of you on the call will know, especially those who are living in Israel, have become much stricter in terms of allowing clients to bring sums of capital from overseas into Israel. If you leave your money in a tax haven like the Isle of Man or Jersey or Guernsey in a wrapper, and then you want to bring it into Israel, that is going to raise red flags at your Israeli bank. So not only have you unnecessarily incurred high fees with a structure that you probably didn't need because you could have achieved the tax-free returns by having your custody with an Israeli bank anyway, but you're going to make it far more difficult for yourselves and your beneficiaries to bring money to Israel at a later date.
Yeah, there's no point having money you can't access or can't use. So we work with all the Israeli banks. We are able to get preferential fee arrangements and really, really low-cost fees. I think it needs to be said that working with Israeli banks will test your Zionistic beliefs to their very core. It's not easy. There are very good reasons why the Israeli banks are going through, I think, what we could call a regulatory overshoot, perhaps to clean up many years where they were a bit lacking. But so when you bring money into Israel, you should expect to jump through a certain amount of hoops and answer a whole lot of questions about the money and the source of the money. When you bring that from an offshore center, a tax-free center, those questions are tenfold. And some of the banks will just put the phone down on you and say, no, you can't bring that money in under any circumstances. So this is part of the planning. Where is your money? And what are the costs? So getting it out of the very expensive, less usable offshore centers and bringing it in onshore is definitely recommended unless they're very, very special circumstances. So if you want, I think an important point here is that some of the Olim think that if they keep their money physically outside of Israel, then they can enjoy the 10-year tax-free. But that's not true. You could bring that money physically into Israel, Bank Leumi around the corner from you, for example. All you do is tell them that you're an Oleh Chadash, And on the global portfolio, so the dollar, euro, etc., part of that portfolio, you will still get the tax-free benefit, but the money will be convenient for you at your local bank. If you convert that money to shekels, then you'll face Israeli taxes within your first 10 years. So we can get low fees. We can work with Israeli banks. We can work with global banks as well, with Swiss banks or non-banking platforms. Those are also options, and each one has their advantages and disadvantages. But we can but the point, I think, is to get it out of these less favorable offshore centers, which are so common practice in the UK.
Yeah, I mean, the cynic in me would say that the reason too many people who make Aliyah from the UK end up in these expensive offshore wrappers, rather than the simpler, much lower cost and easier route of setting up accounts through an Israeli bank, is because the advice they're getting is from someone who isn't licensed in Israel and can't set that kind of arrangement up for them. But in my view, that shouldn't be a reason to not do it, because all the indicators point to it being a far better solution, a far lower cost solution for most of the clients that I meet. Another issue we increasingly come across with clients of ours from the UK, in fact, it's probably similar to clients of ours from other sort of countries like Canada, Australia, and South Africa, is they've perhaps got far too much exposure to local assets and local investments and local fund managers in the portfolios that they have set up before they make Aliyah, and that's primarily about familiarity. But as anyone who's been investing in the UK market will know, for the last 10 years, it's been a period of considerable underperformance against most major global indices. And the best example, perhaps, is the S&P 500, the benchmark index of US shares, against the FTSE 100. Over the last 15 years, the cumulative return, as you can see from the FTSE, has been 145% of return. The total return from the S&P 500 has been more than double that. It's been 350%. It's really, really very dangerous to have that home market bias once that home market is no longer your home market.
So our view is that that's likely to continue. The innovation that's in the United States, the technological dominance that those type of companies have, whether it's the Apple, Google, Facebook, etc. The UK doesn't seem to have anything that rivals that. I think that those companies, whilst they face some sort of short-term challenges, I do think that they're so huge and so dominant that that's likely to continue. So we believe our global portfolios have a bias towards USA on the one side and China on the other side. Obviously more money in the USA than China. We think this is the way to be positioned. Whether that's right or wrong is not quite the point we're trying to make here. The point we're trying to make here is that a UK investor typically has way too much money focused on the UK market. He's not even fully invested in the European market, never mind the US and China and other places in the world.
Yeah, I mean, as I often say to clients in the UK as well as here, just because an asset manager has an office in London doesn't automatically make it one of the best asset managers in the world. You just have to be global in every aspect when it comes to financial planning once you're out of the UK. One of the other, perhaps in my view, most important issues to consider is whether you're going to end up paying tax voluntarily when you're living in Israel. And it amazes me how many people are so generous that they're happy to voluntarily incur significant tax bills on an ongoing basis, tax bills they could have easily sidestepped or mitigated with some careful planning and with some good advice. I meet people who are paying UK income tax on property income, on other investment income, which could be tax-free for 10 years after they've emigrated. I see clients who've got onshore UK investments, like unit trusts and investment bonds, where they're similarly paying tax on investment returns unnecessarily or capital gains tax. Clients who don't structure their affairs for inheritance tax. Inheritance tax is a tax that can be paid still at 40% on your worldwide assets, even after you've made Aliyah, if you haven't structured your arrangements properly. And even if you manage to move yourself outside of the UK net for inheritance tax by changing your domicile, you will still be subject to UK inheritance tax, as I said before, on your UK assets. I mean, many clients, and Mike, I think, is going to give us an example, who pay a lot of US withholding tax on dividends and investment income from the USA, perhaps unnecessarily. And one of the issues that's becoming increasingly prominent with a number of my clients is the issue of US estate tax. And when you lived in the UK, of course, inheritance tax was your priority and your concern. And the UK-US double tax treaty meant that UK had first bite of the cherry in terms of taxing the estate, and there was no tax left to pay in the US because the US rates are no higher than the UK. Israel doesn't have inheritance tax. Israel doesn't have estate tax. So whilst it has a double tax agreement with the USA, which is of considerable importance when it comes to income and gains, it's pretty irrelevant when it comes to how your estate will be taxed when you pass away. All US citus assets within the definition of the legislation are taxed up to 40% of their value for US estate tax, with a threshold as low as $60,000. If you've got US property, if you've got US shares, Google, Apple, Facebook, Microsoft, JP Morgan, if you've got US mutual funds, if you've got US trackers with BlackRock or with Vanguard, anything above $60,000 will be subject to US estate tax when you die. It amazes me how many clients I meet who have no idea about this, and actually how many portfolio managers who are similarly ignorant of this significant tax issue.
Yeah, so just to talk about that example, we recently met many clients who have exposure to this US tax. But if you have a diversified portfolio of US stocks, then effectively you're exposed to the US market. So you could replace your basket of US stocks, even if it is dominated by Apple and Facebook, etc. You could switch that out for an index tracker. Now, if you're invested in, let's just say, Apple, and Apple shoots out a dividend, you are subject to 30% withholding on that on that dividend coming out of the United States. And you're exposed to the US, the non-resident alien estate tax, which is the $60,000 threshold that Andy mentioned. So you've got 30% withholding and US citus. Now, if you construct that portfolio via Dublin-based ETFs or index trackers, the double tax agreement between Ireland and United States is only a 15% withholding. So the same dividend comes out of Apple into this index tracking product, and you've already saved 15% of the tax on the dividend, and you've saved the exposure on the US citus issue. So by redirecting the same portfolio, essentially the same portfolio, via Dublin and products, then we've saved the client 15% of the dividend. So your dividend is roughly 2.5% a year on average, and 30% of that would have been withheld if you held it directly. It's now only 15%, and the US citus exposure, particularly for an elderly client or somebody who's a little bit more at risk of that, and that is tremendously significant. I think that that's something that we've done many times, and there's tremendous value added to the client.
Thank you. Yeah, I mean, for one, the client that Mike was alluding to, that the reduction in his annual withholding tax more than exceeded the fees he's paying for portfolio management, and several $1 million of estate tax has been nicely sidestepped. So really an important issue to be aware of if you do have any US investments, but even if you don't, still very important to consider what taxes you are voluntarily subjecting yourself to, probably unnecessarily. The final solution, the final problem we wanted to just address, because it's one again that seems very prevalent with clients that we meet and with people that we speak to, is they're not getting the kind of joined up holistic financial planning advice that they need. And that primarily is caused by the fact that they take advice from a UK-based advisor before they make Aliyah, but that advisor is not able to give them advice in Israel once they've made Aliyah. That advisor is not able to help them with things like shekel investments, with Israeli structured investments, working with Israeli banks as a custodian or for other reasons. They end up really selling themselves short because they're not getting the complete solution that they need, which of course includes the fact that ultimately financial planning is a long-term personal relationship. Yes, you can meet clients on Zoom. Yes, you can talk to your advisor on the telephone. But there are certain times in life where you want someone to be sitting opposite you in your home, in an office, helping you through the challenges and troubles that unfortunately life brings to us. And it's at that point that the highly personalized service of a personal advisor falls short if that advisor is stuck in one country and you are living in another one.
Right. So whilst regulation is super important, it's not there for our benefit, it's there for your benefit. So we are regulated here. In addition, we're also regulated in the United States under the SEC, in Canada, Ontario Services Commission, South Africa. We have a regulatory joint venture in France as well, dealing with some French and Belgian clients. We have tremendous experience with Olim, and Pioneer's been around 34 years. Face-to-face service in your preferred language, Anglo-Saxon culture, as our documentation is in English, and we certainly know what the expectations of an Anglo client are in terms of service, which is another area which will test your Zionism once you make Aliyah. And at the end of the day, it's all about peace of mind when you need it.
It absolutely is. You know, I often say to clients, financial planning is not about getting rich quick. It really isn't. In fact, it's probably not about trying to get rich at all. It's about achieving financial security. It's about achieving peace of mind. Whether you've already made Aliyah and you're here and you realize that perhaps you've made some mistakes along the way based on what we've discussed this morning, or you're at the stage of thinking about Aliyah, it's really, really important to make sure that you get your financial plans right. Because if you get your financial plans right, you follow the basic principles of investment management and financial planning, then quality of life and peace of mind is something that can become a part of your Aliyah story. Rather than worrying about the exchange rates, or worrying about the pound, or worrying about unnecessarily paying tax, or just not feeling comfortable because you're in Israel dealing with a firm whose culture is one that you're not familiar with, the language barrier, etc., etc. It's possible to achieve financial security and peace of mind by planning your finances carefully and by getting the right advice from qualified and experienced advisors. And that really, I think, is the final message that Mike and I wanted to convey to everyone this morning. So we're going to wrap up now. I'd like to thank everyone for joining us. Where do we go from here? Well, my contact details are on the screen. If you'd like to be in touch with me, you've got questions you want answered, perhaps like to arrange a brief conversation or a discussion or a review, then I'm available in the coming weeks to meet. If you're in Israel and the rules change, then perhaps we can meet in person, even here at our offices. I'm often in Jerusalem, Tel Aviv and Netanya seeing clients as well as in the Renana Herzliya area. And of course, Zoom has been an amazing thing. Meeting clients in the UK all the time on Zoom. Happy to schedule a time for a conversation, time to look at the plans you've already put in place and perhaps give some suggestions, or the opportunity to give you advice on how you might best deploy the capital that you've got and plan your assets and your income to give you that quality of life and peace of mind you're looking for in Israel. But for now, I wanted to thank you all very much for joining us. Thank Mike for his contribution. Mike's also always available, of course, to talk to clients of ours. Wherever you are, please keep safe. Hopefully many of you have been vaccinated. If you haven't, then maybe that's the next thing on your agenda. And if you're in the UK, of course, really cold weather, so just keep warm as well. But thank you very much for joining us. Please feel free to be in touch and keep well and keep safe. Thank you.
Thank you.